Hey there, hope all is well. Back at you today with some more Italy news updates. And as you can tell from today's title, Monte dei Paschi, world's oldest bank, is bailed out. I'm going to be covering a few articles in regards to the current and unfolding events in the country of Italy surrounding the oldest bank on the planet, which is 545 years old, and some of the consequences that the people will face in the fact that the government is now involved in banking. And before I actually get into those articles, I want to encourage you to subscribe to RTD for more news and updates as well as interviews. And also, if you're new and want more information on the Rethinking the Dollar concept, feel free to visit the RTD University page where I put all my most recent interviews as well as just some details on what it means to rethink the dollar. Other than that, let's dive into today's news. So today I have 6 articles I'm going to dive into, all giving a different perspective of what's currently going on in Italy. But yet, once again, it's one of those things where this isn't the first time I've talked about banks, and it won't be the last, I'm sure. And so what's alarming about this is when you have the oldest bank on the planet that's 545 years old, a bank that offers a lot of history, that's been through a lot of wars and all types of things, when that type of bank is in trouble, then it kind of gives you an idea of what the current status of a lot of the newer banks say around 50, 100, maybe 200 years old, the type of condition they might be in, and some of the consequences that will eventually unravel as things become worse on the monetary scene. And so let's dive into today's articles. The very first one here is it's actually from a syndication in Italy called The Local, and it says EU approves bailout of BMPS, the world's oldest bank. The very next one is from Market Watch. It says Italy formally takes control of Monte dei Paschi. The next one here is from Bloomberg, and it's Monte Paschi sees branch cut from 2,000 to 1,400 by 2021. And this is more of a video with a brief description at the bottom of that. And the next one here is from the Financial Times. It says EU approval of Monte Paschi restructure paves way for state control. And then the next one here is Italian banks hit reset as taxpayer billions bailout lenders. And then the very last one here is from St. Louis Post-Dispatch, and it says Italy to nationalize Monte dei Paschi del Siena shed 32.5 billion in bad loans. So let's dive into the very first one. As always, if you're interested in finding out a more in-depth, detailed, review of what's going on, feel free to read these articles for yourself. The goal is to just try to skim through them as fast as I can, give you an idea what's going on the surface. So just to give you a little bit what's going on here, it says the EU Competition Commission has approved a 5.4 billion euro bailout of Italy's troubled Monte dei Paschi del Siena, the world's oldest bank, as part of a major overhaul. It says the decision announced in a statement on Tuesday comes days after Brussels accepted that Italy could inject up to 17 billion euros or $19 billion to break up 2 insolvent Venetian banks, the banks I mentioned last week. It says public bailouts were supposed to be a thing of the past after the Eurozone created a banking union which specifically designed rules to keep taxpayers from having to bail the banks out. It says founded in Siena in 1472, BMPS has been in deep trouble since the Eurozone debt crisis and will now be owned by an Italian state. It says EU competition consumer said that the capital injection had been approved. Nothing it would help MBPS meet capital needs if economic conditions worsen unexpectedly. It says the bailout is a part of a rescue that the EU approved last month after BMPS failed to raise capital on the markets last year. So we had 2 smaller banks that were bailed out by other banks and purchased for the price of maybe €1 or so, and then they broke up the assets and liabilities and things like that. But now we have one of the biggest banks / the oldest bank being bailed out by the state directly, so the taxpayers are on the hook for this one. It says in exchange for the lifeline, Italy must accept a drastic EU-approved restructuring plan for the BMPS that reports say involve up to 6,000 job cuts out of a total of 25,000 employees. So basically, a part of this restructuring, a lot of people will lose their jobs. So if you're interested, more details below. Next one here is from Market Watch. It says Italy formally takes control of Monte dei Paschi. And so this one, as of yesterday, out of Milan, it says the Italian government took control of Monte dei Paschi, injecting 6.1 billion. It says the state recapitalization is the centerpiece of a deep overhaul of the Monte dei Paschi, Italy's 4th largest bank. This will also include a transfer of the bank's 28.6 billion in bad loans to a special vehicle, a cap on remuneration of its top executive, and deep cuts in personnel. It says the bank will give details of its new industrial plan Wednesday morning in a presentation to analysts. Says the bank, which is the world's oldest and was laid low by years of mismanagement, poor lending practices, and political interference, had defied efforts to bring it back to good health. Said its troubles peaked last year when concerns over the stability and the flight of billions in deposits undermine confidence in Italy's banking sector as a whole. So basically, as starting last year, there's a lot of job cuts and restructuring done last year as well. But yet, when people got wind of the idea that the bank wasn't too strong, people wanted to get their money out of there, which created more problems for the bank. More information if you're interested from a different perspective down below. Next one here is in regards to the job cuts. And so this is a short video here of some analysts giving their thoughts on what's coming as part of this restructuring. And it's the idea that Monte Paschi will seize branch cuts from 2,000 to 1,400 by 2021. So basically that ties into the whole restructuring process. They're trying to shrink down things to preserve some capital, which means a lot of layoffs. So even more Italians, rather, will be on the unemployment side of things because of the bad banking practices by Monte dei Paschi as well as other banks. Next one here is from Financial Times. It says EU approval of Monte dei Paschi restructure paved ways for state control. So here it shows a couple gentlemen outside the bank. And so it says here, go scroll down to the bottom a little bit. It says Monte dei Paschi chief Marco Morelli said in a presentation to investors on Wednesday that the plan would involve the closure of 600 branches, bringing the total to about 1,400 branches, and 5,500 job cuts, taking the bank's headcount to about 20,000 by 2021. It also included the disposal of 28.6 in bad loans. Once again, they don't get into details of how they're going to, get rid of bad loans other than somebody taking a haircut somewhere. It says overall, this is a restructuring plan. It could not be otherwise, but it will also create a sustainable and profitable bank going forward. So by cutting jobs, putting these bad loans in a special vehicle, or it said they're going to talk about, being able to, be more stable and more profitable. Not when people in Italy realized that, this bank is controlled by the government and really began trying to take their funds out. This is an important turning point for the Italian banks. It says Italy overall, in our view, the government is finally tackling its banking troubles with meaningful state intervention after years of attempting privately funded, largely unsuccessful alternatives. So, and this guy here, the CEO of this bank, is saying that it's a good thing now because we have the government involved. So basically, the people will be on the hook if things go wrong. So it's good for them. They said the overall cost to taxpayers is likely to be limited to about 1% to 2% of gross domestic product. So it says the overall cost to taxpayers is 1 to 2% of the GDP. Relatively lower than other state bailouts of banks in Europe, but it will push Italian debt from 132.5% of GDP. Wow. It says there were also to be a popular backlash against the use of state aid for banks, they added. It says Italy's banking sector is struggling to digest a legacy of about 200 billion of gross non-performing loans run up during the sovereign debt crisis. The approval helps stabilize a lender that was weighed on Italian banking for more than 5 years, raising questions about Italian and EU supervision and political influence in Italian banks. It's very unfortunate. Next one from Bloomberg. It says Italian banks hit reset as taxpayer billion bailout lenders. It says billions in state aid help Italy's lender muddle through. It says more than 300 billion euros in bad loan remain on the books. Remains on the books. So 300 billion in bad loans you can't just erase or get rid of. Someone's going to lose out. And give you an idea what's going on here, it says coming on the heels of the liquidation of 2 lenders in northern Italy last month, the actions diffuses what's been a big source of financial and political stress in the Eurozone for the last 2 years. It also presents the bloc's 3rd biggest economy with an opportunity to reboot a banking industry long plagued by shoddy underwriting and political interference that has held back growth. It says shoddy underwriting. And give you a little going on here, shows you a graph here. It says chipping away. It says Italian bank reduces their bad debt by 12% in the last year. So here it shows just, the bad debt, of which, if you have, anywhere near $400 billion in bad debt, I'm not quite sure how you're going to really get rid of bad debt. And when it mentions here that because of bad underwriting practices and just a lot of things done to benefit the banks and the shareholders and the higher up executives that I'm sure gotten their bonuses ahead of time, it's unfortunate that, this is something that's going to fall back on the people. So once again, that's just 3 banks in the last couple of weeks that have been bailed out or, bailed in rather, by the Italian government. So question is, how many more banks are they willing to bail in / bail out? Anyway, more information below if you're interested in reading more about it. And so the next one here, the last one here, says St. Louis Post-Dispatch says Italy to nationalize Monte dei Paschi del Siena, shed 32.2 billion in bad loans. Just giving a different perspective of what's going on here. Scroll down a little bit. It says under the bad loan disposal plan, 26.1 billion euros will be bundled and sold at 21% of gross book value. The vast majority to the government organized Alente fund. Well, the bank retains 5%. So they're going to take some of these bad loans, bundle them up into a fund, and then sell them to the government. So the government's going to take that on that, all that bad stuff, knowing dang well that there's no way they themselves can unload that because it's not worth anything. So basically the government is now holder of a lot of bad, fraudulent, and underwriting and things that was mentioned in prior articles here that the banks took on themselves. The government / taxpayers are on the hook for that. It says that compares with a price equal to about 33% of value under a previous relaunch plan announced last fall, but which had to be revised after the bank failed to come up with an investor to inject 5 billion euros. So the banks themselves failed to come out with people, quote unquote, dumb enough to give them more money. So now the government is on the hook for that. And it says that this compares with a price equal to 33% of a value. Or it says, and they sold them at 21% at gross book value. So basically, there's money being lost right away. Unbelievable. But just basically wanted to give you an idea of what's going on in the news today with Italy in the oldest bank on the planet, Monte dei Paschi del Siena. 545 years of history coming down to the very end as this bank unravels and become completely owned or operated and ran by the government themselves / the taxpayers. So there was somewhere in an article where it mentioned about actual bail-ins where just to create some liquidity, they were about turning depositors / junior bond holders into equity holders of the bank directly, which is a form of bail-in. When you can't withdraw your money, they actually convert it over to equity into the bank itself. So you're now, some people have become officially an owner in bank shares of a failing bank. So that's just a small piece of what's going on. But yet, if this is happening in Italy with 3 banks in the last 2 weeks, it's good to say that there's more banks that are probably in the same predicament that's not getting mainstream news, which once I find out about them, I'll make sure to let you know. So just something to keep in mind of what's happening in the monetary realm because of this zero / negative interest rate environment we're in. There's no room for growth. So there's going to be massive losses, and it's going to start where it hurts most with people's deposits. So something to be aware of. Hope you found this informative. If you have any articles that you would like for me to cover, feel free to leave a comment below. I would love to talk about them. And also share your thoughts with me on this article update and news briefing, just so I can know what you're thinking, and also help your family and friends become more familiar with this by sharing this information, because I believe that this subject matter is one of the most important subjects we will hear in this year especially, and in the years to come. So other than that, enjoy your day.